Tell me, what do you think investors are really responding to here? I mean, trade deal with Japan, a big trade partner, but is this also optimism about the EU and other trade deals?
Sure. Look, it's the first top 5 trade deal we've gotten done here, and for us, we're excited about it. It now kind of sets the bar with what we've seen with the Philippines and this probably 15 to 20% tariffs, right? We now kind of have our arms wrapped around what it might look like. There's hope the EU can get it done because Japan was a lot about automotives. Europe's going to be a lot about automotive tariffs. Japan wasn't able to get that through, and so there's hope Europe will get done. And so for us, this was it. We needed the big ones to get knocked down. We needed China, Mexico, Canada, EU. You know, after this, we're looking at Taiwan and South Korea and Southeast Asia. But there's hope now. Okay, here's the framework. We can live with 15%, right? 15%'s the new zero, right? It's not 30, it's not 50. Everybody's excited about 15, which is just such a baseline update. You think a year ago we'd be freaking out about 15%, and here we are celebrating. Oh my goodness, it's just 15% baseline across the board, including automotive.
Does the deal itself, the sentiment's one thing, obviously optimism about more deals, but the deal itself, does it have any market ramifications, any sectors or areas of the market that benefit from this deal?
Sure. First off, automotive should be helped a lot. You know, GM talked about $1 billion headwind on tariffs. You know, there's a lot of not only just automotive cars, but they provide a lot of parts, especially for that'll be imported. Also, the $550 potential $1 billion investment in the United States, that could be a nice little tailwind maybe to build some semis, some other industrials here. 100 jets from Boeing, that's great for Boeing. The LNG deal in Alaska, I mean, that's been a little bit stalled out. I don't think that's going to come around right away, but, you know, obviously that'd be great for both Japan and U.S. producers if we have a direct pipeline to export some LNG out from the Pacific Northwest.
And maybe a commodity benefit with rice. There's a rice shortage over there, and maybe U.S. farmers can benefit from that. I want to go to the market action yesterday because I was actually talking to Mike Santoli at the New York Stock Exchange yesterday, and we talked about some of this mean reversion. I also want to play a soundbite from our Jim Cramer. He kind of gave his take on what he's seeing in the market yesterday.
Sure.
The traders are looking at interest rates, imagining that there's going to be a recession. So they're buying up what typically does well in a recession and ringing the register on everything else.
So important to note, we just showed Palantir's back up. A lot of those leading stocks are back up. I think Seagate was the outlier there. Do you think that's just what happened yesterday? Stocks got too low. Also, interest rates are going low, possibly signaling a possible recession. And people are like, hey, I'm going to trim and I'm going to buy some losers.
Yeah, we did. We saw that huge rotation yesterday. Sell some winners. Axon, Philip Morris rolled over a little bit. Some of that leadership. Netflix has been under a little bit of pressure. And then some of the laggards and home builders and semis, you know, are on, or some of those automotive.
So are we back to normal today?
I think so. I think we're back to normal. It's risk back on,
trade
no
deal,
recession.
risk back on.
Hang on with those winners. We're riding the momentum wave still. We're sticking with our winners. I think there's more to leg up here. It happens. Stocks can take a breather and a pause, a small consolidation, and push back up. Like, they can go down. I always have to warn people, like a Nvidia or Netflix, they can go down, but that doesn't mean the end of the bull market for them. It just means maybe a pause, consolidation, and the next leg up.